Here lies the problem. Mortgage home ownership has been in decline since December 2002, even earlier for younger age groups. And for the life of me, I don't understand why that statistic isn't mentioned clearly within the countless news articles we all look at talking about house prices. It almost feels to me that no government really wants to acknowledge how for quite literally the entirety of this century, home ownership has got harder and harder, and those at the bottom of the housing ladder, first-time buyers, are screwed unless we do something about it. In this video, I'm going to take you through 1, the problem, 2, the costs of buying and owning property, and 3, some recommendations I think could fix it. But before we get into it, the reason this is so important to me is because I've spent my life building a UK-wide home buying company, nationwide estate agency, and my own personal property portfolio. So not only does that give me access to information you probably don't have, but getting this right is critical to mine and my clients' success, because for me, I just want a healthy property market. So please like and subscribe because it helps me out, and let's get into it. Section 1, the problem. We all know there are countless reports out there that talk about how hard it is and has been for first-time buyers. And we all understand that a big reason for how tough it is because of the staggeringly high deposits needed, and of course, more recently, interest rates. But less so interest rates in my view, because often you're simply replacing your rental cost with a mortgage payment instead, and the two are often sort of like for like. With deposits, however, the UK average is £34,500, and in London it's almost £64,000, which is just staggering. But despite this, there is still a whole generation of first-time buyers that are often misunderstood, because we also have a big portion of society that is already on the housing ladder, that has already reaped massive benefit from the incredible increases in house prices over the last century in particular. So it can become quite easy for people to say, well, rates were higher in my day, or you need to stop eating avocado toast, and so on, to simplify and, to be honest, accidentally belittle the challenge younger generations are facing at the moment. The other problem is the challenge to first-time buyers isn't being felt equally across society. So if you're a single income household because you're single or because you've had children and you need someone at home, it's hard to compete given the norm now is mortgages are supported by 2 people, 2 incomes. Whereas in our grandparents' day or even our parents' days, the market was made up of more single income households competing for property, and that generally far easier for single income households to get on the ladder to begin with. Secondly, given the major deposit barrier, a bigger and bigger proportion of first-time buyers are actually propped up by the bank of mum and dad. And so with that, you create this inequitable market where those that have just been fortunate to accumulate wealth, often by massive increases in their own property prices over the last 30, 40, 50 years, are then sharing that with their children to prop them up. So those without family willing to help, or those households being supported by single incomes or lower incomes, are completely excluded from home ownership at the moment altogether. But let's get into more detail on the true costs of buying property. Section 2, the cost of buying and owning property. Right now, becoming a first-time buyer is probably the most expensive it has been over the last 70 years. But in making that statement, you can't just compare house prices, interest rates, or price to earnings ratios. You've got to break it down into 2 key parts. Part 1, what is the cost of buying, which is the upfront cost, things like your deposit, stamp duty, solicitor fees. And secondly, once you've moved in, what is the cost of ownership, which is going to mainly be your mortgage repayments, but you can also include things like insurance and repairs and stuff like that. You can see here the percentage fluctuations in the long-term average for deposits, so your main cost of buying, and for your repayments, which is going to be your main cost of ownership. And these have all fluctuated, but the key thing to watch here is how for some lucky generations, such as the early 1980s and the mid 1990s, repayments and deposit costs have been low. But you can see how entering to the 2000s, how the deposit element has in particular just increased and increased. And now, more recently, not only have we got this monstrous increase in the amount of deposit needed to purchase property, but you then added to it the cost of repayments also spiking upwards. We all know why that is: interest rates. So what's this mean? Why are first-time buyers screwed? Well, now first-time buyers are entering a period where not only are deposits needed historically very high, but now repayments have increased over the last 2 years due to higher mortgage rates, which isn't just creating this massive barrier for those on average wages, it's making it difficult for even those with higher than average incomes to get on the ladder. So look, I'm hoping none of this is a surprise to you, but I'm hoping this video just gives you a bit more numerical evidence on what's actually going on at the moment, rather than just reading the headlines. So what are the solutions here? Section 3, some recommendations to fix it. Now, before I get into the recommendations, I'd personally really appreciate it if you haven't already, that you at the very least like this video. It really helps keep me motivated to keep making this content for you, as it helps the YouTube algorithms spread this video further for other people to watch it. Anyway, how do we fix it? Because right now, recent generations of first-time buyers are having to borrow much larger multiples of their income than previous generations, and there seems no sign of it slowing down. So my opinion is, I think, number one, we need to set up a great British construction company, a new publicly owned British construction company focused on identifying where new housing supply is needed and building it. Not only would that create a swarm of public sector jobs, but it would create a competitor to the ever increasing monopoly a handful of house builders that are controlling the housing supply have at the moment for their own gain. We've got to slow down house price growth, and there's no way to do that unless we take control of supply. It would also massively help form local planning policy, because you'll essentially have a publicly owned construction company, an organisation, facing all the same challenges builders and developers face at the moment around planning laws. And that could hopefully offer a more balanced view as to how planning needs to evolve over time. Number two, house price growth should be managed like inflation. If inflation gets too high, we've all witnessed the massive intervention from the Bank of England with interest rates. Yet house prices can rocket, and no one does anything about it, despite the massive wealth inequality it creates between generations over decades. So how do we do that? Well, we could increase the stamp duty on second homes, for instance. Like we've seen in interest rates, if inflation is too high, interest rates increase. If house prices increase too quickly, let's increase stamp duty for second homes in response. That strangles the competition created mainly by investors and controls prices. I'm an investor, so this would be a massive pain for me, but to be honest, I think it makes a lot of sense. And number three, we've got to give first-time buyers more of an advantage in the market. And the reason that's important to you if you're not a first-time buyer is because first-time buyers coming into the market creates the transactions for others to then move up the ladder. If no one's buying at the bottom, it stalls transactions up the chain. Now, I know first-time buyers already get stamp duty relief up to the value of £425,000, which, by the way, is due to go back to £300,000 in March next year. But in my view, there needs to be more help. I know this might sound like an odd idea, but why not increase stamp duty for second homes from 2% to 3% and use the money that raises to offer first-time buyers a deposit percentage contribution of 1%, for example. So if you're a first-time buyer and you buy a £300,000 property, you pay no stamp duty, and you also get a £3,000 contribution, so 1% of the purchase price as a contribution to your deposit. I think that would be amazing. Anyway, what do you think? I'll see you in the next video.